first here. Global Bitcoin adoption to hit 10% by 2030, Blockware report. The recent report suggests that the adoption of Bitcoin could occur more rapidly than the adoption of past disruptive technologies, such as automobiles and electric power. By 2030, the global take-up of Bitcoin is likely to hit 10%. In its report, Blockware Intelligence said that it made its forecast by looking at the historical adoption rates of 9 disruptive technologies, including automobiles, electric power, smartphones, the internet, and social media, and comparing them to the growth rate of Bitcoin adoption since 2009. The report arrived at its prediction by using the average and weighted average of historical technology adoption curves. It said that based on a metric called cumulative sum of net entities growth and Bitcoin's predicted CAGR of 60%, global Bitcoin adoption is forecast to break past 10% in 2030. Blockware Intelligence is the research arm of Blockware Solutions, a Bitcoin mining and blockchain infrastructure company. The intelligence unit said it expects Bitcoin adoption to reach saturation quicker than many other disruptive technologies, given direct monetary incentives to adopt the current macro environment, and adoption growth will be accelerated by the internet. It has a chart here, technology adoption curves, so you can see that. The authors of the Blockware report stress that their model for predicting the rate of adoption is only conceptual at this stage. They added that it is neither meant to be used as investment advice nor a short-term trading tool, and that it will continue to be refined. However, they said that the general trend is clear. There is a high probability that Bitcoin's global adoption will grow significantly into the future, and thus so will its price. Several crypto investors and analysts, including executives from ARK Invest, Arcane Assets, Amdax Asset Management, and M31 Capital, reviewed the report and model. Cryptocurrency adoption has been increasing rapidly in recent years. Data from AAA shows that in 2021, the average global crypto ownership rate reached 3.9%, with over 300 million users worldwide. Chainalysis' blockchain data platform reveals that global cryptocurrency adoption surged 881% from July 2020 to June 2021. Vietnam had the highest cryptocurrency adoption rate among the 154 countries analyzed, followed by India and Pakistan. So that is good news for those of us who are hodling Bitcoin. Absolutely. We want to buy in now while the price is low. Up next here, Tether deploys new USDT token on the Tezos blockchain. Tether, the leading cryptocurrency stablecoin, has announced the launch of a new asset, Tether USDT tokens, built on the Tezos blockchain. Tether's ambition is to expand its digital footprint across the digital payments and decentralized finance sector. According to the press release, Tether's USDT tokens will be used to power innovative applications in the payments, DeFi, and other industries. In a conversation with the Tether representative, more details were given about the intended use of Tether's USDT tokens. Tether tokens serve as a utility for engaging in internet commerce, combating volatility, and providing a safe haven for remittances. Tether tokens can be securely stored, sent, and received across the blockchain and are redeemable for the underlying asset, subject to the terms of service and fee schedule. The representative continued on to reveal the names of the 12 blockchains on which the asset will become accessible, including Tezos. Tether currently allows transfers across a growing list of different blockchains, including Solana, Ethereum, Kusama, Avalanche, Polkadot, Algorand, EOS, Liquid Network, Omni, Tron, and Bitcoin Cash's standard ledger protocol. Tether's Chief Technology Officer, Paolo Ardoino, is looking forward to the launch of the new product, anticipating that it will support the growth of Tether across the coming years. Tezos is making its way onto the scene, and we think this integration will be key to its long-term success. So that is good news. If you're interested in Tezos, maybe now is a good time to get in, as they are adopting some USDT there on their platform. Up next here, supply chain thwacking. VeChain's $100 million sponsorship deal with the UFC. The VeChain Foundation, a blockchain logistics firm, has signed a multi-year marketing partnership with the UFC worth nearly $100 million, becoming the UFC's first Layer 1 blockchain partner. The UFC is set to become the latest adopter of VeChain's cutting-edge blockchain technology. Under the new partnership, VeChain's marketing assets and brand will be integrated across the UFC's live events, in-arena promotion, social media, and other areas. The deal is worth an estimated $100 million over a 5-year period, according to an anonymous source quoted by Sports Business Journal. The UFC Senior Vice President of Global Partnerships, Paul Asensio, said the UFC sponsorship revenues are up 30% from an already record-breaking 2021 as a result of the deal. The partnership between VeChain and UFC will begin this Saturday, June 11th, with VeChain's assets appearing during a UFC event in Singapore. So that is happening today. VeChain is a business-focused blockchain ecosystem that is dedicated to supply chain tracking. The partnership is a big shift from VeChain's frugal first quarter. A financial report released in May showed that the VeChain Foundation only spent around $4 million in Q1, with less than $660,000 spent on marketing. However, the foundation did amass a huge $1.2 billion war chest. VeChain's partnership with UFC is one of the deepest integrations of any sponsor in UFC history, with UFC estimating that VeChain's brand will reach 900 million television households in 175 countries. As part of the agreement, VeChain will now be the UFC's official fighter rankings title sponsor, called the UFC Rankings, powered by VeChain. Additionally, the company will have a branded presence inside the fighting ring at all events. The two companies will collaborate to promote VeChain through digital displays and content marketing, reaching an estimated 200 million people. VeChain will offer paid opportunities to UFC athletes to participate in marketing activities for the brand through an annual brand ambassador fund. This is super exciting. UFC is a huge sport, now partnering with VeChain, just more and more crypto adoption getting into everyday households. The UFC has a long history of partnering with blockchain and crypto companies. One of its largest partnerships is with Crypto.com, which is worth $175 million. This partnership allows fans to earn bonuses in Bitcoin when they support their favorite fighters. In November 2021, Crypto.com released the first authorized UFC non-fungible token collection. Since then, the UFC has continued to release more licensed NFTs with NFT developer Dapper Labs. In March of 2021, Stake, a casino and sports betting platform that only deals in cryptocurrency, became the UFC's first official betting partner for the Asia and Latin American markets. Super exciting if you're into UFC. If you like VeChain, this is something that possibly would be a good time to get in. I think VeChain VeChain token price is probably going to go up, so now might be a good time to look at it. Up next here, number of DAOs increases 8x along with spike in votes and proposals. Decentralized autonomous organizations, or DAO, governance proposals and votes cast have all increased 8 times in the past year. The data compiled by Snapshot Labs and shared by Electric Capital engineer Emery Caliscan in a June 9th tweet showed that the number of DAOs has increased by 8.8x from 700 in May 2021 to 6,000 now. The number of proposals has increased by 8.5x, and the number of total votes has increased by 8.3x over the past 12 months, from 448,000 to 3.7 million. Snapshot provides a decentralized governance participation portal where DAO members can propose new initiatives and vote on them. The data was compiled in collaboration with Electric Capital, a Web3 investment firm. Although the findings are encouraging for decentralized governance models, the increase in participation was largely due to a small number of very active DAOs. Most new proposals came from just 10% of DAOs, while 60% of DAOs had 3 or fewer proposals since inception. Despite some bumps in the road, the overall growth of the DAO structure is impressive and shows great promise for the future. DeepDAO, a rival DAO tracking tool, has slightly different figures and shows that there are only 4,833 DAOs as of June 10th. Caliscan noted that the uptick in new proposals can be attributed to the popularity and wide coverage of Constitution DAO. The organization, which was set up last November with the intent of buying an original copy of the U.S. Constitution, garnered a great deal of attention and ultimately proved the power such organizations can have. According to DeepDAO, PancakeSwap and Decentraland are the 2 most active DAOs by proposal count, with 3,300 and 1,200 respectively. Only the top 72 organizations have submitted at least 100 proposals. While the numbers for DAO growth are promising, a draft bill from the U.S. Senate could put a stop to it if no changes are made. The bill calls for all crypto projects to register with the government and reveal the identities of their users and founders. I know a lot of people have issues with this due to the fact of they like crypto being decentralized and the anonymity of it. So this may pose a problem. Let me know your thoughts on that. Up next here, Yellen doubts crypto's place in 401k, says that Congress could regulate. The Secretary of the United States Treasury, Janet Yellen, spoke about the risks associated with investing in cryptocurrencies and called for stronger regulation by Congress. On June 9th, during an event organized by the New York Times in Washington, Yellen shared her opinion on Fidelity Investments' pioneer attempt to include crypto in retirement plans. According to Yellen, investing in cryptocurrencies is very risky and not something she would recommend to most people saving for retirement. The Department of Labor, Senators Elizabeth Warren, Tommy Tuberville, and Cynthia Lummis all participated in a discussion concerning digital currencies and 401k plans. I appreciate they're trying to look out for people, but at the same time, if people want to invest their money in crypto, let them invest. When asked about the best way to protect retirement programs from another market crash, Yellen said that Congress could regulate the type of assets that can be included in these programs. She clarified that she wasn't necessarily recommending this course of action, but that it could be a reasonable solution. It's important to note that the last statement is in relation to the continuous legislative uncertainty surrounding crypto as a retirement investment. According to the Employee Retirement Income Security Act of 1974, 401k investments are subject to certain standards of care. This act doesn't explicitly say which asset classes can or can't be included in a 401k, but it does require fiduciaries to act in a way that a reasonable and prudent person would. In April, Fidelity announced it would allow 401k retirement saving account holders to directly invest in Bitcoin. The United States Department of Labor responded with a compliance report threatening legal action, while Senators Elizabeth Warren of Massachusetts and Tina Smith of Minnesota requested the firm to provide answers on how they are planning to address risks laid out by the DOL. On the other hand, Senator Tommy Tuberville from Alabama has put forth a Financial Freedom Act that would let investors include cryptocurrency in their 401k retirement savings plans. Similarly, Wyoming Senator Cynthia Lummis has hinted at the possibility of legalizing crypto in 401ks as part of her long-awaited crypto bill. And last but not least here, despite what you heard, NFT market is far from dead, DApp Radar. The NFT market may have slowed down from its peak, but that doesn't mean the industry is done for. Far from it, in fact. Yes, everything is slowing down, all crypto. I think NFTs are just getting started. DApp Radar's latest industry report shows that NFT sales volume hit $3.7 billion in May. While this is a 20% drop from April, industry activity is still strong considering the current bear market for crypto assets. DApp Radar pointed out that when marketplace volumes are measured in their native tokens, such as Ether, the decrease is not nearly as significant. For example, in April, the largest NFT marketplace, OpenSea, generated 950,000 ETH in trading volume, which was only down 6.5% from the previous month. However, when measuring OpenSea's monthly volumes in US dollars, there was a decrease of 25%. Meanwhile, Solana NFTs hit their best trading month yet, generating $335 million in volume across all marketplaces. This is a 13% increase compared to the previous month of April. According to DApp Radar's report, NFT collections such as Moonbirds and Solana's OK Bears were the biggest catalyst for the industry's solid performance in May. Meanwhile, the free-to-mint NFT collection, Goblin Town, generated $31 million in sales since launching on May 22nd. The high demand pushed the project's floor price from 0 to 6 ETH at the time of publication. However, the news contains some negative aspects as well. The value of blue-chip collections like Bored Ape Yacht Club saw a sharp decline as buyers shifted to newly hyped collections. According to DApp Radar, the floor price for BAYC declined 38% in May, falling from 150 ETH to 93 ETH. NFTs may not be immune to crypto market volatility, but the industry appears to be carving out a strong niche. According to a recent report by crypto data aggregator CoinGecko, the NFT market is projected to move more than $800 billion over the next 2 years. I'm not surprised by that number at all. Let me know what your guys' thoughts are on NFTs. If you're getting in now, if you got in a while ago, if you haven't yet got in. That's all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.